Welcome to Insurance World TV. Today, we're diving into a groundbreaking discussion about the current state of motor vehicle insurance in Kenya. Have you ever found yourself wondering about it? This may not be the question that keeps you up at night, but it's definitely worth discussing. Let's study together the prevalent model of annual motor vehicle insurance coverage. This model, as it currently exists, is filled to the brim with restrictions. It demands policyholders to predict their coverage needs for the entire upcoming year. It's akin to forecasting the weather a year from now. Sounds far-fetched, doesn't it? Life follows no script, and neither do our insurance needs. Often this results in policyholders shouldering more coverage than required, or inadequately insured when unexpected events occur. Now, shift your attention to the insurers. They too grapple with the problems this model creates. The existing structure might expose them to uneven risk. Consider a scenario where a large number of accidents occur early in the year. This could lead to substantial payouts, possibly shaking the insurer's financial stability. The inflexibility of the annual coverage model is akin to forcing a square peg into a round hole. It simply doesn't fit. It fails to cater to the changing needs of policyholders and doesn't provide insurers with a predictable, manageable risk environment. This model is comparable to a universal-sized garment. It may cover the essentials, but lacks the tailored fit that provides comfort and satisfaction. If we don't settle for ill-fitted clothes, why should we tolerate an insurance model? In this dynamic world, where adaptability is key, the insurance industry must progress to stay relevant. The current model of motor vehicle insurance in Kenya seems like an artifact from a past era, unfit to serve the modern policyholders and insurers. Indeed, it's high time for a reassessment and a revolution. The future of motor vehicle insurance in Kenya is in a model that is adaptable, responsive, and precise. A model that aligns coverage with actual needs rather than fixed timelines. It's time for a revolution. Let's delve deeper into what this revolution could entail. Imagine a model that aligns the coverage period with the policyholder's actual needs. Picture this. Instead of being locked into a rigid annual insurance plan, you could adjust your coverage every quarter. This is the heart of the proposal we're discussing today, transitioning to a rolling 12-month insurance model with quarterly updates. So what does this entail? Let's dive into the key elements of this proposal. Firstly, flexibility. This model gives policyholders the power to adapt their coverage to their evolving needs. No longer would you have to predict your insurance requirements an entire year in advance. Instead, you could adjust every quarter, ensuring you're always adequately insured. This eliminates the risk of overpayment for excessive coverage or underinsurance due to unforeseen changes. Tailored solutions at your fingertips. Secondly, enhanced risk management. With this model, insurers can spread the risk more evenly throughout the year. Quarterly reviews would provide more frequent data on policyholder behavior and risk profiles, allowing insurers to better manage risks and reduce financial volatility. It's a win-win situation, fostering stability for both policyholders and insurers. Thirdly, let's talk about improved customer experience. The rolling 12-month model offers increased convenience and responsiveness. As a policyholder, being able to adapt your coverage to changing circumstances is a significant advantage. This adaptability can build trust and loyalty, resulting in a more positive relationship with your insurer. Lastly, we have data-driven insights. Frequent updates would generate a wealth of data that insurers can use to refine pricing, underwriting, and risk assessment. This data-driven approach could lead to more accurate and competitive insurance products. In essence, the more data we have, the better we can serve you. So, you might be thinking, this sounds great, but how would it work in practice? Well, transitioning to a rolling 12-month model would require a structured approach. This includes a phased introduction period to allow policyholders and insurers time to adapt to the new system gradually. It also involves the development of user-friendly digital platforms to facilitate policy updates and streamline administrative processes. And of course, clear and concise communication is key to ensure everyone is on the same page during this transition. In conclusion, the proposal to transition to a rolling 12-month insurance model with quarterly updates signifies a promising step towards a more responsive, precise, and efficient insurance industry. A model that evolves with the policyholders' needs, fosters trust, reduces risk exposure, and leverages data to refine insurance products. It's time to reimagine the insurance industry, and this could be the innovative approach we've been waiting for. Change, however, requires careful planning and execution. The transition to a rolling 12-month motor vehicle insurance coverage model, updated quarterly, is no exception. It requires a structured approach, and today we'll delve into the core components of this implementation strategy. First and foremost is the introduction phase. Policyholders who enroll onto this cover will first purchase an annual cover and pay premium. Then, at the beginning of the last quarter of the running policy, they are called upon to pay premiums for the quarter that next quarter, and the certificate is issued accordingly. This will ensure that at any one given time, the vehicle has 12 months cover, paid and issued. The only difference is the client will be paying premiums quarterly, thereby not burdened by huge annual premiums. Change can be daunting, but by introducing this new model over a defined period, we can ensure a smooth transition. It's about taking small, manageable steps towards the goal. This phased approach allows policyholders and insurers alike to adapt gradually to the new system, learning its nuances and benefits as they go. It's about making the change digestible, manageable, and ultimately successful. Next on our strategy list is the development of digital solutions. In our rapidly evolving digital age, it's paramount that we leverage technology to facilitate this transition. User-friendly digital platforms should be developed to streamline administrative processes and make policy updates as seamless as possible. These platforms will serve as the backbone of the new model, offering convenience and efficiency to both policyholders and insurers. But of course, the most sophisticated digital platform is of little use if people don't understand it. That brings us to our third and final strategy component: clear communication. This transition isn't just about changing a model, it's about changing a mindset, and that requires effective communication. Clear, concise information must be provided to policyholders, agents, and partners about the new model, its benefits, and how it works. This can be done through a variety of channels, from traditional mailings to digital newsletters, webinars, and targeted social media campaigns. Support should also be readily available to answer any questions and address any concerns that arise during the transition. This isn't just about telling people what's happening. It's about showing them why it's happening and how it benefits them. In conclusion, the transition to a rolling 12-month motor vehicle insurance coverage model, updated quarterly, is undoubtedly a significant change. But it's a change that promises great benefits, flexibility, enhanced risk management, improved customer experience, and data-driven insights. And with a structured approach, one that includes a gradual introduction phase, the development of user-friendly digital solutions, and clear, effective communication, this change can be more than just a concept. It can be a reality that revolutionizes the motor vehicle insurance industry in Kenya, serving the best interests of policyholders and insurers alike. With a structured approach, the transition can be smoothly and effectively executed. This transition holds the potential to redefine the insurance industry in Kenya. As we've explored today, the transition to a rolling 12-month insurance model, updated on a quarterly basis, brings with it a multitude of benefits. It offers a powerful solution to the limitations of the annual coverage model, aligning insurance more closely with the evolving needs of policyholders. Firstly, this model introduces unprecedented flexibility. Policyholders can adjust their coverage every 3 months, ensuring they're never overpaying for excessive coverage or risking being underinsured. It's a tailored solution for every individual policyholder, providing precisely the coverage they need when they need it. Secondly, this model enhances risk management for insurers. Quarterly updates offer regular insights into policyholder behavior and risk profiles, helping insurers spread risk more evenly throughout the year. This approach reduces financial volatility and promotes stability, making the insurance industry more resilient. Thirdly, the rolling 12-month model significantly improves the customer experience. Policyholders will appreciate the convenience and responsiveness of this model. The ability to adapt to changing circumstances fosters trust and loyalty, strengthening the relationship between policyholders and insurers. Lastly, this model is a treasure trove of data-driven insights. With frequent updates, insurers can refine their pricing, underwriting, and risk assessment strategies based on real-time data. This approach leads to more accurate and competitive insurance products, benefiting both policyholders and insurers. In conclusion, the transition to a rolling 12-month motor vehicle insurance model, updated quarterly, has the potential to revolutionize the insurance industry in Kenya. It's a win-win situation for policyholders and insurers alike, offering flexibility, enhanced risk management, improved customer experience, and data-driven insights. Let us embrace this innovative approach that not only serves policyholders and insurers better, but also paves the way for a more dynamic insurance industry.